All right, guys, welcome to the personal wealth framework. When you guys hear about all these big companies not paying taxes and being protected when they get sued and they're going bankrupt, but they didn't lose any of their assets, it's because they have a version of this particular framework. This is something I got from a guy named Ed Collins. It's called the Real Wealth Matrix. He has it on YouTube, and I've adopted it in my personal life and my business life. So I'm going to jump in and share my screen right now with you so you can get an idea of what it is I'm looking at. So this is called your personal wealth framework. And it starts with a trust. I want you guys to understand a trust is just a private document. There's a revocable trust and an irrevocable trust. We're going to really be talking about revocable trusts. They have flexibility. You can own them. You can be the beneficiary. You can leave it to somebody else. It could convert into an irrevocable trust when you pass on. It's important that you understand the framework of trust and you don't need to submit it anywhere publicly because it's a private document. You can draft this yourself. I use ChatGPT for mine, and it took me like 2 or 3 days to go really heavy, and I created an amazing trust. And then here you go. So you want to keep putting in provisions governing law. It gives you the framework of what you need. You could then find some online, like different templates, and then incorporate it in here. So like, I want asking out, does this protect my children if I pass away? Their beneficiaries, trustee. And then what is a dynasty trust? So I'm going to add that to it. Then you're going to ask it, can you add this to it? Certainly. And so it's going to update your trust as you start learning more about trust. Now, let's go. Can own my holding company. Yes. So the trust can own your holding company. So I just want to make sure you guys saw that. The basic structure of what I'm going to do. Now let's jump into this structure again. So that's your trust. You're going to form your trust. You have a lawyer do it. You can do it yourself. Now, the trust is going to own your LLC, which you're going to elect to be treated as an S corp. That's your holding company. This holding company, all right, is going to manage and operate all the assets that the trust owns. Now, the state that you're operating in, okay, is where you should have an operating company. Your holding company, though, could be in a state like Delaware or Wyoming. The reason why I like these two states is there's anonymity. No one knows you own them. Like, it's out of the state. There's no state income tax, but there's also, you can't contact that state and find out who owns the LLC in Wyoming, right? It's completely anonymous. You don't put your name anywhere. That's why it's great the trust can own that. Now, that holding company, the LLC that follows an S corp right here, it's important for later that you understand that, can own a salon equipment leasing company and also own a marketing company. So this operating company, this operating LLC that cuts hair, I'm in New Jersey, let's say it's where I'm at. I have the New Jersey LLC that pays, that leases the equipment from this leasing company that's in Delaware. So I'm defunding the operating company and my tax liability here in New Jersey. So all my salon equipment, my chairs, everything that I have in my salon, I don't own. The company that I operate out of doesn't own it. It leases it from the salon equipment leasing company. Now, all my marketing is done by a marketing company. Even though it's done in-house, I pay fees up to a marketing company. So I write off computers. I get a whole nother layer of deductions from that marketing company. Now I pay management fees up to the holding company. So essentially, I'm just defunding my salon's operating company to the point where if someone were to sue that salon because they fall and get hurt, there's really nothing that it owns. So you're completely protected. And I want you guys to start thinking like business people because you guys are business people. Now, if you own a suite, you can do the same structure. If you own, if you are a freelance stylist, you can do the same thing. If you're a commission stylist, you can set yourself up the same way. You can even talk to your owner and be like, hey, I want you to 1099 me. I want to be independent. And I want to lead into that conversation right now. The reason why we need to talk about this is you need to understand how this personal wealth framework works. So when you do have stylists that get to a certain level, you make them independent. Now, there's a lot of conversation right now going on about it being illegal or not illegal. 1099ing employees is illegal, but 1099ing stylists, independent contractors is not. Now, there's certain things you have to understand. You can't dictate their schedule. You can't restrict them from working elsewhere, right? So you have to really make sure you understand your state's labor laws and abide by them. But the best thing that I like to do is form an agreement, form a contract. Now, you have the right to contract in every state. Every state has their constitution, and the right to contract between two citizens is protected by your state. It just depends on where that falls in your constitution. And then federally, it's the 14th Amendment. You're going to want to form an agreement, just like you would if you were Apple contracting NVIDIA to make you chips for your cell phones or computers. It's no different. You're contracting someone to facilitate services in your business. I mean, it gets tricky because some states have stipulations that the same activities or same reason for the business to exist, you can't hire someone to do those same things. Now, a person you may not be able to, but if you're just facilitating the transactions and you give them what they did in the salon, their LLC, then you could, because you're not 1099 a human being or a person, you're 1099ing an entity. So if that person does social media for you, right? They're creating content which you're using on your Instagram or your YouTube, and they also seem to be cutting hair in your salon, but they're capturing content in your salon. They're doing more than just cutting hair now. So they truly are independent. And then if they have an LLC, you could 1099 their LLC and they take care of their payroll tax and everything else. So I want to talk about why that's a benefit for both parties. A, for the stylist, you can't write things off as a W 2 employee like you can as an LLC electing to be treated as an S Corp. So this benefits your stylist as well. They can write their car off, their clothing off. They can write their scissors, glasses, blow dryers, everything they spend money on. Like they don't have the benefits of writing that off as a W-2 employee to the degree they can as an LLC. They can adopt the same framework. They can be operating in New Jersey and having that holding company in Delaware or Wyoming. It's a great way for them to protect their assets. Now, if you're a salon owner and let's say your payroll is $50,000 a week times 13% payroll tax, that's $6,500 now. You would not be paying. And I'm not saying this to avoid paying taxes. I'm saying when you have employees, that's part of your obligation as a employer. If you have independent contractors, you don't have that obligation anymore. So you pay them and you 1099 them and they deal with their taxes on their end. But now they have this framework to benefit from it. There's something really cool here too that I brought up in our call is you hear a lot of times like these owners, they have kids on the payroll, $10,000 a year or whatever, 15,000 a year, they can pay their kids and get that deduction by having a child on payroll. Now, everybody knows the cost of daycare. So you can't write daycare off, but you can write paying your child off, right, for doing work into the business, whether it's, social media stuff, whatever it may be. So if you pay your kid $10,000 a year, take that deduction, you can't deduct the daycare, but your kid can pay for daycare out of their account. So indirectly, you're getting the deduction that you want, but it's all done legally. So I need you guys to truly understand this framework and how it benefits you. And if you're a stylist, works for you too. So you're a stylist, you have a daycare bill, but now you have an LLC. And now you could pay your child $10,000 a year or whatever the number is out of your LLC, getting that deduction, and then your child pays for their daycare. Brilliant, right? I get it. Cool. So here I have a independent contractor agreement is made and entered into as of date blank by and between Salon and then LLC blank. It's a principal place of business located at this salon. So you're actually going into all the details of who's involved in this agreement. Typically, it's much better to have that stylist be an LLC. Then the salon hereby engages the stylist, and the stylist agrees to perform hairstyling services and marketing services and whatever services as an independent contractor under the terms and conditions set forth. So this is just an agreement. And you could put in here the services provided, hair coloring, boom, and the hours they're going to be doing it in, and the percentage of the transaction. So now the salon shall handle all client transactions and will retain a percentage of the revenue. So you're retaining the 30 or 40 or 50% that, and then you're giving the rest of the percentage on a weekly, bi-weekly, or monthly basis to that entity. So this states out the whole structure of what you need to do. Now you put in tax obligations. The stylist acknowledges and agrees as an independent contractor, they are solely responsible for the taxes and withholdings. So there's no like discrepancy 2 years from now when they're saying, I didn't know I had to do that. This is the agreement. Now, I have it here, the insurance, right? The stylist shall maintain their own insurance coverage. You can maintain the insurance for the salon, right? But if you wanted to be truly independent, this is something you could do as a renter. This is kind of like a very loosely hybrid contract that you're going to create your own version of. I wanted to give you the framework of it. Typically, I control my insurances. The people can back themselves up too with an extra layer of insurance, but you don't need that if the salon's insured. So with this contract, you're 100% following the guidelines by your Department of Labor and following the law. So when you hear it's illegal to 1099 people, it's not if you do it the right way. So that's the framework I want you guys to understand. Now, there was a lot of questions on how do they do this? Where do they do it at? What if I don't live in Delaware or Wyoming? Glad you guys asked that question. There is a website called Inkfile, which is now it's called Biz Incorporation. So what you're going to do is you're going to incorporate, you're going to select your entity. I want you guys to pick an LLC. And the reason is this. The IRS doesn't acknowledge an LLC, a single owner LLC. It goes right to the owner. So you can have 3 or 4 of these LLCs. It doesn't mean you've got to file 15 tax returns for each one. You file one as the S Corp because everything flows through and flows up. Obviously, I'm not an accountant. I want you to talk to your accountant about this. I want you to talk to them about the framework. And this is really meant to protect your assets. It's really meant to take the benefits of, write-offs for each one of the companies as well. But the main benefit is the asset protection you're going to get from this. God forbid someone gets hurt. God forbid someone tries to sue you. They only get what that main operating company has. And then because you're incorporated in states like Delaware, Wyoming, it's really hard to find out what you even own. And you don't own anything because the trust owns everything anyway, but you control everything. And if you guys are on the path of being successful, you guys need to adopt this framework and this mindset because this is what the wealthy people do. And this is how they maintain their wealth. And this is how you pass it on from generation to generation. So you're going to pick an LLC because you're going to elect to be treated as an S Corp later. 2 states that I love, Delaware or Wyoming. Now, you don't need to live in Delaware. They're going to give you something called a registered agent. So you get your first year free. After that, it's like $125 a year. And then Wyoming might be a little different. Let's see if Wyoming's on here. And so your first year's free too with Wyoming. And then after that, you got some other fees you're going to pay. Now, a registered agent is simply a person who's an agent of your LLC that has the address there. So you just add a forwarder to that address. It goes to wherever you live. I want you guys to understand that your EIN number is a little different than your LLC. That's an SS4 number, an employment identification number. That's what you're going to use when you open up a bank account. These websites make it very simple for you. They give you your EIN number. They give you your operating agreement. They give you your domain. They give you a bunch of stuff, all your banking stuff. If you want to do it yourself, it's very simple. I called up Jenny on the call. If you guys remember, if you were on the call, she's not tech savvy. You could go to your state's website and you could create it directly on the state website. You don't need a website like this, but it just makes it easier for you. I like using them. Lawyers are going to say don't use them. People will say don't use these, use a lawyer. Now, if you have an agreement already, you can take your current operating agreement and you could, you know, get it out of the state you're in and put it in a state like Delaware, but you could draft your own operating agreement inside of here as well. These websites are getting really, really good, but listen, you got to do your homework, you got to do your research, you got to really pay attention to what you're creating here. Now, the IRS is going to pay attention to it as well. So if you want to be compliant, your salon leasing company is going to have all the equipment. The main reason for that company to exist is to lease out salon equipment. So in order to get the deductions you can from that, you got to make sure you have that verbiage in that company's operating agreement. And then you have your marketing company, the same thing. And so your holding company, the main reason for that company is to manage and delegate businesses. So there's a lot of things you can do, but as long as you're compliant, you're using the right verbiage, you're going to be safe. You're going to be completely covered if the time ever comes when you have to explain why you have all these companies to people. And you could save a lot of money by doing this yourself. I like doing things myself, so that's why I do it myself. If you don't feel comfortable, hire an attorney, hire an accountant, sit and talk to them, use ChatGPT. On Tuesdays, once a month, I'm going to be bringing on an accountant so we can ask them questions, some high level stuff. So it's going to be really, really exciting just to get some real life answers from a professional. And then once you go through the whole thing, you hit continue, 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 put your information in, you get all your documents literally in a couple days. Your EIN number, you can get that directly on the IRS website, but they provide it for you here. It's a fee like $75, I think. Yeah, it's $70. It's free in this with this whole standard one. It's fast and easy to do it yourself. It's not hard to do, but if you're in the website already, it's free. Just go ahead and knock it out. That's where I like to do it. It used to be called Inkfile. Now it's called Busy. LegalZoom's another one. You're going to Google it. There's a bunch of them on there. And you just structure them where you want to structure them. Now, there's certain things you have to be compliant with. So talk to your accountant on how you're going to do your QuickBooks and where you're going to pass money to. You're going to make sure that you have a paper trail. Company A pays company B pays company C, and you literally just transfer funds from one account to another, and you're being compliant. You're following the law that's designed to protect you and help you get the best tax breaks you can. Now, just a recap on this real wealth framework starts with your trust. Then your trust owns your LLC. Your LLC owns your operating company. It's in the state you're operating in. You don't have to have the LLC in your state they're operating in, but then you have to kind of file anyway in that state to be compliant. Excuse me. So just have one in the state that you're operating in. It makes things so much easier. And then you create your other LLCs in the states of your choice, Wyoming, Delaware. And that's pretty much it. Take this, dig into it, like go to ChatGPT, have a conversation of everything you could do using the structure. This is what the wealthy people do to maintain and protect their wealth. I don't know about you. I didn't get into owning my own business to be broke. And a lot of salon owners out there are feeling the squeeze right now, from the cost of color to the cost of rent to the payroll tax to all this stuff. There's no need, right? When you watch these people and they have the private jets and they have the yacht and they got 3 homes, how do they do it? This is how they do it. They educate themselves on what's possible and how do you actually write off your kid's school? Well, I just told you how you do it. You pay your kids and make your kids pay for the school. That's where you get your deductions from. So this is really, really important information. Everything's going to be included below this video. If you were on the Zoom call again, sorry about that. Got a little mixed up. We're going to get better on Zoom. But if you have questions and you're watching this video, drop a comment below in this lesson and we can get them answered. So I hope you guys have a better understanding of how you need to structure your entities and your trust and what's possible. And then also exactly how the whole 1099 structure works. Like, it's not illegal. It's illegal to 1099 employees, but they're not employees. They're independent contractors. Just be aware of what your state labor department says and what you can and can't do, and you'll be completely protected. So that is today's lesson. Like I said, drop a comment below or just DM me in the chat directly, and I will see you guys later.